Markets are down again today, continuing to sell off. Dow, Jones, S&P, NASDAQ, crypto, and the real estate market now is joining the party as we continue the repricing, the great repricing of 2022. And so what's going on? Why are markets continuing to sell off? I know a lot of people have been calling for all-time highs or new highs in traditional markets and in crypto. And several people said that we already found a bottom last week before. So what's going on? So until the Fed changes direction and pivots, the markets are not going to reverse. They're going to continue to find a bottom back to their pre-pandemic lows before the Fed got into the game. Neil Kashkari spoke today, other Fed members are speaking, and he said we are not going to rescue the markets. We don't look at the markets. We're not concerned about the markets. And he said that markets basically need to revert back to their pre-pandemic levels. So if you look at the S&P, the Dow, the NASDAQ, crypto, all of crypto, and you look at the levels that the markets were at before the pandemic of the March lows of 2020, that's where the markets need to get back to, where more of a fair value pricing. You could argue that, you know, the markets were still a little overheated at that time, but that is kind of the goal of the Fed, is to get the markets back to that level. We've been looking at that on the charts, and that is going to represent around a 35% drop in all markets to get to that point. The Fed is not going to jump in and rescue any of the markets unless we get into a serious market crash situation where you're down about 50% or more, like we were in March of 2020. So until the Fed eases off the pedal and reverses course, you're not going to see any new all-time highs really in any assets, not in real estate, not in stocks, not in crypto. And the crypto markets are continuing to drop as I am recording this video today, about 3 o'clock Eastern Standard Time. And again, the key is to watch the momentum into the close for traditional markets to gauge investor sentiment. Same thing with crypto. Crypto markets are in lockstep because they are risk assets. And there's a lot of different things going on in the markets right now. So the $29,000 major structural support for Bitcoin is going to be tested, it looks like. Price has gone down to about 30,000 here today. And a lot of the altcoins are down another 20% or more from where they were a couple of weeks ago, when they were already down 70 or 80%. So the things that I've been talking about for the last couple of months here, and really since the end of last year, beginning of this year, was that the markets peaked back in November, December of 2021, and we were in a deleveraging and repricing situation because of all of the global macroeconomic events and environment that we're in right now, which are higher interest rates, the Fed removing and reducing the balance sheet, ending quantitative easing, going into quantitative tightening, the war in Ukraine, inflation, and all of those things. And inflation and high interest rates are the biggest thing that are having effects on future and forward earnings for companies, which are really affecting stocks. Cryptos are risk assets. The same investors in stocks are the same investors in crypto. So that's what's going on, and the whales have been manipulating the markets. As you can see, everything is kind of unwinding all at the same time. So these are the things that we've been talking about for a while, and a lot of the bigger crypto influencers that were talking about new all-time highs and bull market, and we're still in a bull market and things like that. A lot of those people have never been through a bear market. They've never been through a global macroeconomic environment like we're in now. This is a first, really, with a lot of the things that we're facing right now. But we've been through several recessions, several bull and bear markets over the last 25 years in real estate and stocks and everything else. So markets don't always go up always and forever. You can't use the HODL strategy always and forever in perpetuity. There's times to buy and there's times to sell, and you have to maximize your opportunity. And having a 5-year or even a 10-year outlook isn't always the best strategy, because there's no guarantees that price is going to go anywhere. So now I think you can understand a lot of these crypto influencers just have never seen a higher interest rate environment. They've never seen a non-QE environment. They've never seen a non-free money, zero interest environment. They've seen bull market only. So you really can't blame them for that. But you have to qualify what they're saying. You have to incorporate a little risk management. You have to be aware of the downside. Those same crypto influencers were saying you'll never see 50,000 again, you'll never see 40,000 again, you'll never see 30,000 again. And here we are, and it's only been a few months. We're only in the first part of May of 2022, and a lot of those influencers never thought we'd be here again because of the on-chain analytics and the fundamentals of Bitcoin and crypto. So the fundamentals are good. There's a lot of adoption, there's a lot of use case, and they are good assets for the long term. And the on-chain always looks bullish. So you have to qualify all that, because the whales and institutional investors and large investors can manipulate all that data. And that stuff at the end of the day doesn't matter when you're looking at a risk asset, because the same people that are driving the market environment and the moves in the market are the same people in stocks that are the same people in crypto. So it's all kind of tied together from the type of risk assets that we're talking about. So you got to be real careful and qualify that information from, a lot of these influencers are saying price can never go below a certain level, or that it can never go above a certain level, or that it will definitely hit a certain level, or will definitely, top or bottom. What we do know is that recently price was during the March 2020 pandemic, in a big market crash, Bitcoin went down to $4,500, and it went up to 69,000. So that is our range. Those are two areas that we know Bitcoin has gone to and can go to again. Beyond each one of those levels would be a new situation that you have to be prepared for and be on the lookout for. So right now we're in a downtrend, we're in a deleveraging moment. We should get a little bounce here, but we may get more continuation to the downside depending on the economic environment. Right now it's risk off, a lot of technical selling going on, a lot of margin calls going on, things like that. So until that settles out, we're not going to find a bottom, and really we're not going to see a bull market. We can find a bottom, rebound, and kind of crawl along sideways to sideways up in traditional markets, in crypto, for a while, but you're not going to see bull market on like we've seen over the last couple of years, and really over the last 10 years, without the Fed being involved, because the economy with inflation is unwinding and going into recession. So those are the things that keep the market from going, and the minute the Fed pivots, you can count on bull market back on. So that's going to be your all-in moment and signal when that happens. And then we'll just have to watch. We should get some nice bounces in traditional markets as well as crypto along the way. Hopefully we'll see a turnaround Tuesday, tomorrow, and get a nice little bounce. I wouldn't make any moves based on that, because we are still in a very tricky risk-off environment right now. So until we hit some of these bottom areas and consolidate for a little bit, you can't really count on a reversal. So these are the things that I'm looking at. The markets are very risky right now. It's a risk-off market. You got to put risk management in play. In other words, you got to look at what's the worst case scenario down, what's the best case scenario up, which side of that bet are you willing to take, and what's the worst case scenario if you lose. And the biggest thing you don't want to be without dry powder when markets do rebound and the Fed does pivot, because that's when it's going to be time to get in and make generational wealth and really life-changing money for yourself and your family when that moment happens. And you'll know it because the Fed will come out, guns a-blazing, and they will let you know exactly what they're going to do and when. So until then, have a great afternoon and evening wherever you are in the world, and watch that market into the close and see what the momentum looks like to gauge investor sentiment and potential of where we're going in the future.